We are starting with customs portion. Look into page number 160, segment 21, taxable event under customs. So this customs portion is for 20 marks and FTP 4 to 5 marks. So because the weightage of customs and FTP is 25 marks, in that what they do is that in MCQs hardly they ask some two questions for 2 marks each, like that for 4 marks, and remaining and all they will be testing not as a separate standard question given, usually part C. For example, question number 2, 3, 4, 5, in this part C will be customs, and you can see the first charging section that we have under customs is section 12. Section 12 of Customs Act 1962 says that for the purpose of levy of customs duty, there must be 4 conditions that should be satisfied, and if all these conditions are satisfied, then there is levy of customs duty. What are those 4 conditions? There must be goods. Such goods must be in Customs Tariff Act, means they should be dutiable goods. So here 2 acts you need to remember: Customs Act 1962 and Customs Tariff Act 1975. Customs Act 1962 contains the provisions related to valuation, procedures, levy, collection of customs duty on import and export duty. Whereas how much customs duty we need to pay on those goods is given in Customs Tariff Act 1975. Means what are the various customs duties and what is the rate of customs duty is given in Customs Tariff Act. If there is a product which is not specified in the Customs Tariff Act, then we don't have to pay customs duty on that product. So the first condition is that there must be goods, and such goods must be specified in Customs Tariff Act, means it should be dutiable goods, and such dutiable goods must be imported or exported, because import or export is the charging section. So therefore the basis of levy is on import or export, and where it should be imported, it should be either imported into India or it should be exported from India. What is the meaning of India? Under GST, the meaning of India is up to 200 nautical miles from the baseline, whereas under customs, the meaning of India is only up to 12 nautical miles from the baseline, which means that when the goods are said to be imported, whenever the goods enter the territorial waters, not exclusive economic zone. So therefore, for the purpose of customs, what is the meaning of India? India includes territorial waters of India. So therefore, what is territorial waters? Up to 12 nautical miles from the baseline. Then we have exclusive economic zone up to 200 nautical miles, but these are called as Indian customs waters. So up to 200 nautical miles is known as Indian customs waters. You can see in the next page, means waters extending into the sea up to the limit of exclusive economic zone, that is 200 nautical miles. So what is the purpose of that? That is, when you take this as India, and up to 12 nautical miles is known as territorial waters, correct? So up to 12 nautical miles is known as territorial waters, and whenever the goods enter into this territorial waters, then the goods are said to be imported, and whenever the goods cross this territorial waters, then the goods are said to be exported. Okay, so the import and export is based on this territorial waters only. Territorial waters. Then what is the purpose of 200 nautical miles from baseline? From the baseline up to 200 nautical miles is known as exclusive economic zone, and this is actually called as Indian customs waters. Is it for the purpose of import or export? No, for the purpose of control. That is, Customs Department will have power up to 200 nautical miles from the baseline. So this waters is known as Indian customs waters. So department, that is Customs Department, can board into any vessel and can check the goods, can arrest any person if that person is dealing with smuggled goods. So that powers of the Customs Department is extended in this place. Okay, so what is this locality? Up to 200 nautical miles. So therefore beyond 12 nautical miles and up to 200 nautical miles, the Customs Department will have the powers. So few sections of Customs Act will be applicable, not all sections. You can see here few sections empowering customs officer to arrest or search a vessel are applicable in this area. That is about exclusive economic zone. Then what about the area beyond this? So the area beyond this, so we don't have any applicability of Customs Act. That is, the area beyond this is known as high seas, and this high seas is called as international waters. And in these international waters, the law of India will not be applicable. Okay, that is with respect to this. Then next you can see four conditions. What are the four conditions for levy of customs duty? There must be goods. That goods must be dutiable goods. That dutiable goods should be imported or exported. That import or export must be into India or from India. If all these four conditions are satisfied, then there will be levy of customs duty. What is the meaning of dutiable goods? Those goods which are covered under Customs Tariff Act 1975. Whether government goods are also treated as goods imported and chargeable to customs duty? Yes. So in customs, like GST, so GST also government is a person, and whatever transactions that government make, they are required to pay GST. Same way under customs also government is a person. Whatever imports or exports that government is making, they are required to pay the customs duty unless it is exempted elsewhere. So there might be some exempted goods imported or exported. Unless exempted, even government is also required to pay customs duty on imports. Like certain goods are covered under exemption, like defense articles, then arms, ammunition, then this military uniforms. So all those things are coming under exemption. But otherwise, any commercial goods which are imported into India, that will attract the customs duty. That's what I have given. Government goods shall be treated on par with non-government goods for levy of customs duty. Then you can see some important definitions here. So as we have levy only when there is goods, so we need to understand what is the meaning of goods. So goods means what? Any kind of movable property. So that is known. But even vessel, vehicle, aircraft which is bringing the goods is all goods. The vessel or the vehicle or the aircraft which is bringing the goods is also treated as goods, and that's the reason why that vessel or vehicle or aircraft, once it comes to India, so it should not be used for domestic transportation. So it should be used for international transportation only. Even for domestic transportation, we import some aircrafts and all. So that will be treated as import of goods only and chargeable to customs duty. Then stores. Stores refers to the goods which are inside the conveyance, that is aircraft or vessel, whether or not for immediate consumption, like spare parts, fuel, water, consumables, food items, all those will be treated as stores. You can see the meaning of stores in the next point. Stores means goods for use in the vessel, for use. Whether they are using it now or not, it is for use in the vessel or aircraft, and includes fuel, spare parts and other articles of equipment, whether or not for immediate fitting. So stores also will be treated as goods. And baggage. Baggage refers to passenger's luggage. So passenger, when he is coming, either check-in baggage or cabin baggage, both will be treated as baggage which is imported, that is also treated as goods. Even currency and negotiable instruments is also goods under customs. But currency and negotiable instruments is actually not goods under GST. So on import of currency, whether customs duty is payable, yes, but whether GST is payable, no. Generally, whenever we are importing goods, we are required to pay customs duty. Along with customs duty, we are also required to pay IGST. But in case of import of currency and negotiable instruments, we are not required to pay any GST, because this currency and negotiable instruments is not goods under GST. Due to that reason, we don't have to pay any IGST. For example, if a person is bringing some currency in exchange or in exceeding capacities, like beyond the limit specified under FEMA, then in that case, that currency which he is bringing, foreign currency, will be treated as goods, and on that he need to pay customs duty. Okay. Then next, import. Generally import means what? Bringing goods from outside India to India. That's a simple definition. Export means what? Taking goods from India to a place outside India. Then India already we have seen meaning. Customs area means, so in every port or airport, not every port or airport is first of all customs port or airport. What is customs port versus a normal port? If the imports and exports are permitted in that port or airport, it is called as customs port or airport. There are many ports in India, but not in every port, imports and exports are permitted. Those ports or airports where it is permitted is known as customs port or airport. Even in that customs port or airport also, entire locality will not be under the control of customs department. There is some specified area, that area will only be under the control of customs department. For example, when you get down in an international airport, so the moment you come out in the gate, there will be green channel and a red channel. So that green channel, red channel gate is only under the control of customs, but not the entire airport is under the control of customs. So that is the meaning of customs area. So means the area under customs station includes any area in which the imported goods or exported goods are ordinarily kept before clearance by customs authorities. So all imported goods also will be kept under the control of one person. Who is that person? Custodian. So that custodian will keep the goods. So the area where the goods are kept is also called as customs area. Then dutiable goods. Dutiable goods means any goods which are chargeable to duty. How do you know whether it is chargeable to duty or not? You need to check Customs Tariff Act. If those goods are covered under Customs Tariff Act 1975, those goods are called as dutiable goods. Okay. So goods which are chargeable to duty, on which duty has not been paid, not yet paid. So upon payment of duty, it will become what? Duty paid goods. Dutiable means levy is there, but you have not yet paid. The moment you make the payment, it will become duty paid goods. You can write that upon payment of duty, it will be duty paid goods. Upon payment of duty, it will become duty paid goods. Then next, Indian customs waters. Already we know up to 200 nautical miles from baseline. What is export goods? Goods which are to be taken outside India is known as export goods. And exporter. So who will be called as exporter? Either the owner of that goods or the beneficial owner or any person holding himself out to be an exporter. That is, if I am manufacturing the goods and if I am exporting the goods, I am the owner of that goods, I will be called as exporter. I am manufacturing the goods and you are exporting the goods. I am the beneficial owner of that goods, but you are exporting. So I am also treated as exporter for the purpose of customs. You are also treated as exporter for the purpose of customs because you are holding yourself to be exporter. So therefore, the supporting manufacturer, I am actually called as supporting manufacturer. I am also exporter and you are merchant exporter or a third party exporter because you are not manufacturing the goods. You are just exporting on behalf of the other person. So you are also treated as exporter. So owner, beneficial owner or any person holding himself out to be an exporter. The same meaning we have even for importer also, ditto. Owner, beneficial owner or any person holding himself out to be importer. Who is beneficial owner? On whose behalf the goods are imported or exported is known as beneficial owner. Actually those goods are mine, but I don't have the license or I don't have the contacts in the foreign country to make the export or import. So in that case, I will take your assistance. Now in that case, I am the beneficial owner. Any person on whose behalf the goods are being imported or exported or who exercises effective control over the goods being imported or exported will be called as beneficial owner. Then imported goods, already we know goods which are brought into India from a place outside India. baggage. What is baggage? Passengers luggage. And the baggage can be accompanied baggage or unaccompanied baggage. Accompanied means the bag that comes along with the passenger is known as accompanied baggage. Unaccompanied baggage means the baggage which comes either before his arrival or after his arrival is known as unaccompanied baggage. What happens sometimes, we put a check-in baggage and we have to transfer 2-3 flights to visit India, and what happens sometimes, the baggage will come before our arrival, and therefore that is also treated as baggage. Sometimes what will happen, we will come but the baggage will be stuck somewhere in the transfers, so now that bag will come after our arrival, so that is also called as baggage. Here includes unaccompanied baggage but does not include motor vehicle. So motor vehicle can never be brought as baggage actually, so can be brought only as cargo. So cargo consignment, no idiot will bring motor vehicle as baggage, but these provisions were given sometime long, like 1960s and all. At that time airways was not there, it was only the ship, so in the ship they used to take lots and lots of luggage. Under that context it has been given, but now it is irrelevant. So anyhow, baggage does not include motor vehicle. Then coastal goods. Coastal goods means goods which are neither imported nor exported but taken in the seaways from one port in India to another port in India is known as coastal goods. For example, between Maharashtra and Gujarat, there is a huge trade that will happen in the seaways. Surat port to Mumbai port, lot of transactions will be happening. So, but that is waterborne, like it will be touching the coastal waters, because compared to roadways, seaways is better for larger consignments for them. So these goods are called as coastal goods. Goods other than imported goods, transported in a vessel from one port in India to another port is known as coastal goods, and the provisions related to import and export is not applicable for coastal goods, because these goods are domestic goods on which GST will be applicable but not customs duty. That's the reason why we don't have any provisions related to coastal goods in Customs Act, but we have some provisions which is omitted for CA final exam. Some provisions are there, like what are the documentation that they need to do, because they will be touching the seaways, what documentation they need to maintain, like that and all, but that is omitted for CA final exam. You don't have to learn that, but just remember what is the meaning of coastal goods, that is sufficient. Then foreign going vessel or aircraft. What is a foreign going vessel or aircraft? Name itself says a vessel or aircraft takes people or goods from where to where, from a port or airport in India to a port or airport outside India is known as a foreign going vessel or aircraft. That's a simple definition. Any vessel or aircraft for the time being engaged in carriage of goods or passengers between any port or airport in India and any port or airport outside India, whether touching any intermediate port or airport. Okay. Now, apart from this, even some aircrafts and vessels will also come under foreign going vessel or aircraft. Navy vessel of foreign government taking part in any naval exercises is also called as a foreign going vessel or aircraft. So foreign government's navy vessel. Then any vessel engaged in fishing or other operations outside the territorial waters of India. So what is territorial waters of India? 12 nautical miles. After 12 nautical miles, if there is any ship or a boat that takes for fishing, so even that is also called as a foreign going vessel or aircraft. Why? Because what is the meaning of India? Up to 12 nautical miles. So beyond 12 nautical miles it will be called as outside India. So therefore it will come under foreign going vessel or aircraft. Then 3. Any vessel or aircraft proceeding to a place outside India for any purpose whatsoever. Okay. What is this? So maybe some jet flights or any vessels, Indian Navy vessels or Air Force aircrafts which are taken outside India. So for trial runs and all they will take, that will also be coming under foreign going vessel or aircraft. What is the purpose of this foreign going vessel or aircraft? Generally, any goods which are sold to a foreign going vessel or aircraft will be treated as export goods for the purpose of duty drawback. there is a concept called as duty drawback under customs. That is, whenever we are importing some goods and we are making export, on import whatever customs duty we paid, we will get it as a refund. That is known as duty drawback. Again, I am repeating, carefully listen. I am importing some goods. Those imported goods I have exported. On import I would have paid some customs duty. That customs duty I will get as a refund. So the name of that refund is known as duty drawback. For the purpose of duty drawback, export includes not only real export that is taken outside India. Even in India, there is a foreign going vessel or aircraft. To that foreign going vessel or aircraft, you make sale of goods that is treated as export for the purpose of duty drawback. So that's why this definition is useful. Then, so with this we have seen various definitions. These definitions may not be tested and all, but maybe worst come scenario somewhere in question number 6. If they give 2 definitions for 2 marks, so then because of that we cannot skip that question number 6. That's why we need to know these important definitions. Then next, once the goods are imported, what we are trying to understand is the taxable event and point of payment of customs duty. And for that we need to know what are the options available to the importer. As and when the goods are imported, importer is having 2 options. Option number 1, either he can clear it for home consumption, means as soon as the goods are unloaded in the port or airport, he can take it to his place. That is known as imported goods cleared for home consumption, and for that they need to file one bill of entry. What is the name of that bill of entry? Bill of entry for home consumption. Bill of entry is a document which is filed by the importer with the customs officer for the purpose of clearance of imported goods. So he need to pay the duty, he need to claim that he is the owner of the goods, and he need to pay the duty and he need to clear it. For that purpose he will file down document. What is the name of the document? Bill of entry. And option 1, clearance for home consumption upon payment of customs duty and by filing bill of entry for home consumption. Option 2 is what? As soon as the goods are imported, those imported goods can be kept in a warehouse. Which warehouse? Customs warehouse. Upon payment of duty or without payment of duty? Without payment of duty. And again it can be cleared from the warehouse upon payment of customs duty. That is option number 2. But this warehouse should be a customs warehouse. And what is a customs warehouse? Is it the warehouse which is owned by the customs department? No. Customs department is not owning any warehouses. These are licensed to the, like people. Any person, if they satisfy the licensing conditions, they can also own a warehouse which is a customs warehouse. The license is given by the commissioner or principal commissioner under customs. Those warehouses are only called as customs warehouses. So deposit in warehouse without payment of customs duty by filing one document, one bill of entry. What is the name of that bill of entry? Into bond bill of entry, or also known as bill of entry for warehousing. Okay, then and clearance from warehouse upon payment of customs duty by filing ex bond bill of entry. So this ex bond bill of entry is for what purpose? Taking the goods from the warehouse. So in total there are 3 bill of entries that we have come across here. Bill of entry for home consumption. What is the purpose? Imported goods taken to importer's place without payment of customs duty or payment of customs duty. Payment of customs duty. Bill of entry for warehousing or inbound bill of entry, into bound bill of entry. For what purpose? Imported goods can be deposited into the warehouse without payment of customs duty. Then ex bond bill of entry is for taking the goods from the warehouse upon payment of customs duty. Then without filing bill of entry, the unloaded goods cannot be cleared for home consumption or for warehousing. So someone has to file the bill of entry to claim that goods. Until that point of time it will be called as unclaimed goods, and those goods will be under whose possession? Under the control of a custodian. Only when this bill of entry is filed, there will be one out of customs charge order that will be passed by the customs department, and we need to submit that out of customs charge order with the custodian. Then only custodian will release the goods. So therefore without filing bill of entry, clearance is not possible. Then goods can be cleared to warehouse without payment of customs duty, but thereafter for clearance to home consumption from warehouse, customs duty is payable. and when the bill of entry needs to be filed. Bill of entry needs to be filed before the date of arrival. Previously, bill of entry can be filed any time, but now bill of entry needs to be filed before the date of arrival of the ship or aircraft. For example, today aircraft or ship has arrived. By yesterday night, the bill of entry should have been filed. If the bill of entry is filed today only arrival, today if it is filed, even then there is late fee. You understood? So bill of entry needs to be filed before the date of arrival. Okay, can be filed before arrival or after arrival, but time limit is before the date of arrival. If filed on the date of arrival or later, then a late fee will be payable. You understood or not? You can file, but you have to pay the late fee. If you don't want to pay the late fee, you have to file it before the date of arrival, even though it may be a holiday. For example, Monday is the date of arrival, Sunday is a holiday. Even then, by Sunday, you should have filed the bill of entry. Then, next, as clearance from the warehouse is the taxable event, what will happen is that at the time of import of goods, those goods might be dutiable. We are importing some goods, those goods are dutiable at the time of import. We kept those goods in the warehouse, and after some days, we cleared the goods from the warehouse. At the time when we cleared the goods from the warehouse, so the customs duty has become exempted on those goods. Now, whether we need to pay customs duty or not, so we are not required to pay customs duty. Why? What is taken as the taxable event under customs? When you file bill of entry for home consumption or ex-bond bill of entry, whatever is the position of the goods, that only will be taken. You got it? So at the time of import or at the time of unloading or at the time of deposit in warehouse, it may be taxable or exempted, that is irrelevant. At the time of clearance, when you will clear, whenever you file the bill of entry for home consumption or whenever you file the ex-bond bill of entry, you are going to clear. At that time, are those goods dutiable? Yes. Then pay the customs duty on those goods. Say this, if goods are exempted at the time of import and by the time goods are cleared from warehouse, if exemption is withdrawn, opposite, then whether duty is payable? Yes. Same way, if goods are dutiable at the time of import, before clearance from warehouse, if the goods are exempted, whether duty payable or not payable? Not payable. Then, sir, can we use this as a tax planning measure? Of course, yes. So, we will have an idea that they will be exempting these goods in the near future, in the budget and all. So, what they will do, they will import the goods, they will keep it in the customs warehouse, and after budget, so there will be effective date from which they will remove the exemption. After that, we will file the ex-bond bill of entry and clear, and we don't have to pay any customs duty because those goods are exempted goods. Are you understanding this? And moreover, here what will happen is that the extra charges that we have is warehousing charges, but that warehousing charges can also be avoided if you are having your own warehouse converted as public warehouse, okay, or a private warehouse, means customs warehouse. You can have your own warehouse as customs warehouse also possible. You need to just get a license, then even warehousing charges also will not arise in that case. Customs warehouse does not mean a warehouse belonging to customs department, but a warehouse which is owned by a person licensed by the customs department to act as customs warehouse. Then if an importer has a warehouse, this is the point I told you, for which license is obtained, then he can defer the customs duty payable till the time he uses such goods as clearance from warehouse is only the taxable event. See the advantage that he has. He can import the goods, he can deposit those goods in his own warehouse, and only when those goods are taken from his own warehouse to manufacture, at that time only he need to pay customs duty. You understood or not? That is this point. Then next, various documents which are involved, you can see. So mode of import or export, it can be by vessel, by aircraft, or by vehicle. So if the mode of import is by vessel, in case of import, what is the document to be filed by the person in charge? What is the document to be filed by the importer? If the mode of import is by vessel, the name of the document is import manifest. If it is aircraft, arrival manifest. If it is vehicle, import report. You understood here? So whenever the goods are imported, okay, so person in charge has to file one document. What does that document contains? The document contains the details of the goods which is present in the conveyance. Okay, so what is the name of the document? If it is vessel, import manifest. If it is aircraft, arrival manifest. If it is vehicle, import report. Same way, in case of export, the person in charge has to file a document containing the details of the goods which are taken outside India. So again, the same names like import manifest here, export manifest, arrival manifest here, departure manifest, import report here, export report. Who will file this manifest? Person in charge of the conveyance. Then importer will be required to file one document. The moment goods are imported, importer has to prove that he is the owner of the goods now. For that he need to file one document which is common for all the modes, that is bill of entry. Then what is the document to be filed by the exporter? In case of vessel or aircraft, the document name is shipping bill, and in case of vehicle, the document name is bill of export. Okay, shipping bill when, bill of export when. In case of vessel or aircraft, the document is shipping bill. In case of vehicle, the name of the document is bill of export. Then who is called as person in charge? In case of vessel, the master of the ship. In case of aircraft, pilot. And in case of vehicle, conductor, guard or any other person. Only after filing import manifest, grant of entry inwards is given for the vessel to enter into India. That is, person in charge has to file this import manifest with the customs department. Customs department will verify, okay, these goods are allowed to be imported. Then the customs officer will give grant of entry inwards. Only when the customs officer gives grant of entry inwards, the vessel can enter into India. But this concept of grant of entry inwards is not there for aircraft until that point of time where we can keep the aircraft. If the grant of entry inwards is not given, vessel means we can anchor it somewhere, but aircraft we cannot park anywhere. Okay, so we don't have any air parking spaces and all, so the aircraft has to come. But the grant of entry inwards is required for the purpose of unloading the goods. See that. Only after import manifest, grant of entry inwards is given for vessel to enter into India. The concept of grant of entry inwards is not applicable in case of aircraft and vehicle, but arrival manifest or import report should be filed before arrival. Now, along with bill of entry, the importer has to submit the document of title to the goods. What is the document of title to the goods? In case of aircraft, airway bill, and in case of vessel, bill of lading, lorry receipt, railway receipt. These are the documents of title. Who will be giving these documents of title to him? By the exporter. Exporter will be sending this document. So only when he submits the document, then only customs department will know that he is the owner of the goods. So to claim the ownership of the goods, and along with that, an invoice raised to him by the supplier. So what are the three documents to be filed by the importer at the time of clearance? Number one, bill of entry. Number two, document of title, that is bill of lading, airway bill, etc. And number three, invoice which he got from the exporter. Then next, what is the taxable event and relevant date for determination of rate of duty in case of import and export? Now, what we have seen so far is the taxable event. What is the taxable event in case of import? As and when the goods are imported and cleared for home consumption, that is only the taxable event. Means it is not the date on which the goods are imported, but the date on which goods cross the customs barrier, that will be taken. Okay, it is not the date of import, but the date on which goods cross the customs barrier, that will be taken. What is the meaning of customs barrier? Customs control. When you will be taking the goods out of customs control, whenever you want to clear it for your place, that is home consumption. This is held by Supreme Court in Kiran Spinning Mills case and Garden Silk Mills case. You need to remember this Supreme Court judgment. Then, in case of export, what is the taxable event? The date of crossing the territorial waters is the taxable event. So whenever the goods are crossing territorial waters, that will be taken as taxable event. Suppose if the goods are taken in the sea and before crossing territorial waters, the ship has sunk within the territorial waters, is it treated as export? No. Only when it crosses the territorial waters, it is treated as export. Same way, the ship crosses the territorial waters and returns due to engine trouble, will it be treated as export? No. As per Sun Exports case, as per Rajendra Dyeing and Printing Mills case, that I told you now, that is ship has sunk within the territorial waters, that is this case. Remember, ship sinking, Rajendra Dyeing and Printing Mills case, okay. Then Sun Exports case, what is that Sun Exports case? The goods will go and it will return due to engine trouble. Sun rises in the east and sets in the west. Sun Exports case, okay. So Rajendra Dyeing and Printing Mills case and Sun Exports case. So date of crossing the territorial waters is taken as the export. Next, suppose if the goods are imported and it is kept in the customs port and it is taken outside India, will it be treated as imported goods for payment of customs duty? No. Goods are coming to India, we kept it in the customs port and thereafter we are taking it outside India. Is it treated as import for the purpose of customs? No. Because what is the meaning of import for the purpose of customs? Only when it crosses the customs barrier. We are not crossing the customs barrier. We have kept it in the customs port only. Thereafter it will go. So it is not treated as import. Will it become export? Yes. Why it will become export? Because it is crossing the territorial waters. So it will become export in this case. That's what many people who make merchant trade, that is import from one country and export to another country, they will import it and keep it in the port or customs warehouse and export it, so that they are not at all required to pay the customs duty, but they will get all the export incentives. All the export incentives. This is as good as goods manufactured in India and exported. Like that it will be treated and they are ready for getting many export incentives. That is actually a better idea rather than importing, clearing it for home consumption, pay customs duty, thereafter export and get the duty drawback, refund. First we have to pay and get it as a refund. Nah, we can avoid that at all. Import it, keep it in the customs warehouse and export it from there itself. Don't pay any customs duty and still you are eligible for the export incentives. Then, as per section 15 and 16, we have the relevant date for determination of rate of duty. What is taken as the relevant date for determination of rate of duty means on which date the rate is there, that should be taken. In case of import, that to option 1. What is option 1? Imported goods cleared for home consumption. If it is vessel, date of presentation of bill of entry or grant of entry inwards, whichever is later will be taken. Usually which will be later? So grant of entry inwards is given for arrival of the vessel, and arrival of the vessel before itself they need to present the bill of entry. Usually the time limit for presentation of bill of entry is before the date of arrival. So generally which will be later in this case? Grant of entry inwards will be later, correct or not? If you file the prior bill of entry, now there will be one trouble that will arise. At the time when you filed the bill of entry, the rate of customs duty on that product was 10%. At the time when you have got at the time when grant of entry inwards was given, the rate of duty on that product is 12%. Now which will be taken? Whichever is later. Whichever is later means 12% will be taken. When 12% is taken, already we filed bill of entry with 10%. What is that we can do? Should we file a new bill of entry? Not required. The same bill of entry which was filed before, if we do the amendment, that will be sufficient. No need to file a new bill of entry. That is this. Date of presentation of bill of entry or grant of entry inwards, whichever is later. Sometimes we may file the bill of entry late. If we file the bill of entry late, then which will become the later date? Bill of entry date, and whatever is the rate of duty on that date, that will be taken. Then in case of aircraft and vehicle, so instead of grant of entry inwards, we replace it with arrival. Date of presentation of bill of entry or arrival of the vehicle or aircraft, whichever is later. Because I told you the concept of grant of entry inwards is not applicable in case of aircraft and vehicle. So therefore instead of grant of entry inwards, here we replace with date of arrival. Then in case of option 2, option 2 is what? Imported goods kept in the warehouse without payment of customs duty, and thereafter it is cleared from the warehouse upon payment of customs duty. So what should be taken as the relevant date for determination of rate of duty? It is the ex-bond bill of entry. It is not in-bond bill of entry. It is the ex-bond bill of entry. In case of warehousing, 2 bill of entries will be presented. What are they? inbound bill of entry and export bill of entry. Rate of duty prevailing on which date should be taken? Export bill of entry date should be taken. But see the exchange rate point. In case of exchange rate, always we need to take the bill of entry only. Okay, let it be option 1 or option 2. We need to take date of presentation of bill of entry only as the relevant date for determination of exchange rate. But in case of option 1, only one bill of entry is involved, that is bill of entry for home consumption. So on that date, whatever exchange rate is there, we will take. But in case of option 2, we have two bill of entries, inbound bill of entry and export bill of entry, which should be taken for exchange rate inbound bill of entry. You got it? So in case of warehousing, which bill of entry is relevant for exchange rate? Inbound bill of entry. So at the time of deposit of goods into the warehouse, you need to know what is the value of the goods. That's the reason why inbound bill of entry date is relevant for exchange rate. Whereas you will pay customs duty only at the time of clearance from the warehouse. So export bill of entry date is relevant for determination of rate of duty. Understood? This is in case of import option 1 and option 2. Then in case of export, as per section 16, what will be taken as the relevant date for determination of rate of duty? Date of let export order passed by the proper officer. As and when we take the goods to the proper officer for the purpose of export, the proper officer will verify the shipping bill and bill of export, and he will be passing let export order. Okay, the goods can now be exported. So that let export order date is relevant for the purpose of rate of duty. Then for exchange rate, we need to take shipping bill or bill of export. Exporter will be filing one document, right? That is shipping bill or bill of export. So this shipping bill or bill of export will be taken as the relevant document for the purpose of determining exchange rate. And whose exchange rate should be taken? Exchange rate as determined by CBIC should be taken. It's not GAAP rate or it's not RBI rate and all. So it is determined by CBIC should be considered. Then in case of improper import or improper export, what is the meaning of improper import or export? Smuggling. Without giving proper documents, if you are trying to import or export, that is known as smuggling. In that case, if you are caught, what will be taken as the relevant date for determination of rate of duty? On the date on which you pay the customs duty, on the date for the goods, whatever is the rate is there, that is only relevant. In case of improper imports or improper exports, relevant date is the date of payment of duty. So with this, taxable event under customs is over.